about media and media stocks with somebody who has forgotten more about media than we'll ever know. That is Tom Rogers, founder of CNBC, now CNBC contributor, executive chair of Oorbit, among other things. I'm going to say something about bankruptcy, Tom, but it has nothing to do with the stocks. I want to make that clear. But it's kind of like the trajectory of this business. Hemingway famously wrote, there's two ways to go bankrupt. Gradually, then suddenly. And it feels like the ground that shifts that Dan was referring to has just opened up in the last 6 months. Where's a bottom here?
Well, I think it's a great question, but it's really two very different stories between Disney and Warner, and you got to look at them differently. Obviously, not a good day in either stock. And there was a lot of disappointment on the amusement park side of Disney. But when you look at what the whole problem has been here, would streaming ever make up for the decline in the traditional linear business? And Disney can say, and I don't know why they didn't talk to this, and I don't know why it hasn't been something that analysts have highlighted, but they got to a point in the last quarter where combined direct-to-consumer streaming revenue actually exceeds the revenue of their traditional linear businesses. Now, obviously, revenue top line is not margin, and they got a long way to go before the margin on the streaming side begins to make up for the loss of profitability on linear. But that's a major milestone that none of the other traditional media companies have yet hit.
Okay, these are good points, and I want to be clear, there were some things that, like Laura Martin, maybe the top media analyst out there, noted that she liked the margins in some of the areas. She liked the fact that they added 800,000 subscribers. But I think to your point about making money, Tom, last night we talked about Rivian, an EV maker, right? And they're selling cars and trucks. Some of them are $100,000, but it costs them a lot more to manufacture the car. So revenue is going up, but profitability is not there. It sounds like that's kind of what you're sort of analyzing with Disney and Hulu and everybody else. Will there ever be a time of streaming profitability? Does the model ultimately work? Because if it doesn't, Tom, I don't know what the industry is going to do.
Well, Disney, for the first time, did hit streaming profitability. Remember, I've been very cautious about Disney, warning over and over again over the last several years that when people compared Netflix and Disney, Netflix was miles ahead. That's clearly the case. But you can't take away the progress Disney has made here. Warner is a bit obscure because what is in the Warner streaming numbers is cable HBO. So it's not a pure look at their at streaming per se when they talk about direct to consumer. And that clouds the picture, obviously propping up to some extent revenue. Now, when they say they only had 3 million plus subs, I think they probably lost a bunch of cable subs, and so their actual streaming subs may have increased more than that. I don't know why they don't give a clear picture. But that is a company that is nowhere near being able to get to the point that its streaming revenues are equivalent to its linear revenues. And with that company, linear represents 80% of the revenue and profits of the business.
You gave Tom a bunch of accolades as you invited him in. You could have just basically said it in one word. Dan, you know what that word is?
Stud.
Stud. And he is. So here you go, Tom. You know, since we're on the Hemingway thing, the sun also rises, and it rises in the form of Netflix, which, by the way, has given you a bit of a pullback over the last couple of months. So all the things we've been talking about and hearing, is this recent sell-off in Netflix once again an opportunity for traders to get back in a stock that's been almost bulletproof over the last 10 years?
Well, I think if you believe in media still as something that is going to be an overwhelming focus of consumer discretionary spending, it is clearly going to be the leader. It is, by all metrics, is way ahead of everybody else. You know, when you look at Disney Plus introducing maybe 16 new shows for the season max, introducing it. Warner maybe about the same. And Netflix has a model where they're able to introduce 92 new shows in a quarter, which is just a remarkable difference in terms of how the machine works, being able to drive engagement. Now, they haven't proved themselves on advertising yet. And all these companies are clearly setting themselves up to be hugely reliant on advertising. And Amazon came to the party and depressed everybody's pricing by throwing basically all of Amazon Prime viewership into the advertising pool now, along with YouTube, which has become the streaming leader. And so that is something which Netflix is going to have to prove itself on and has a long way to go to do that. But in other respects, yes, it's way ahead of the pack, and it's at this point probably something that is worth investing in.